I didn't lose money. That's the part that makes this story uncomfortable, because most traders only recognize danger when money is already gone. But for me, nothing was on fire. My account wasn't bleeding. There was no margin call, no panic, no urgent need to fix anything. I was profitable, not lucky profitable, not 1 week profitable, not the kind of profitable that disappears the moment conditions change. I mean structured, repeatable, almost boring profitable. The kind of profitable where trading doesn't dominate your emotions anymore, where you don't rush to tell people about wins, where your focus shifts from survival to consistency. It's the phase most traders dream about, and almost no one talks about how dangerous it is. At that point, trading had started to feel normal. I woke up, checked the charts, followed my routine, executed my plan, and walked away. Some days were green, some were flat. Occasionally there was a loss, but it didn't shake me. Losses felt like data. Wins felt like confirmation. Nothing felt dramatic. And I told myself this was maturity, that I had finally become emotionally resilient. I wasn't wrong, but I wasn't fully right either, because resilience has a shadow side no one prepares you for. When fear disappears completely, something else often fades with it. Respect. Not conscious disrespect, not arrogance, just a quiet reduction in how seriously you treat the things that kept you safe. At first, it was subtle enough that I didn't even notice it. My preparation didn't disappear, it softened. I still had a checklist, but I didn't slow down for it anymore. I didn't feel it mattered the same way. I knew what I was looking for. I had seen these setups hundreds of times. So instead of carefully walking through my conditions, I skimmed them. Yeah, this is fine. I've seen this before. This lines up enough. Enough. That word matters. Because trading doesn't collapse when rules disappear. It collapses when precision disappears. And the scary part? The market didn't punish me for it. It rewarded me. Trades I entered slightly early still worked. Setups that were a little imperfect still paid. Days where I felt less sharp still ended green. And that reinforcement did something dangerous inside my head. It rewrote the relationship between discipline and outcome. I stopped believing that rules created profits. I started believing I did. That shift doesn't feel arrogant when it happens. It feels earned. After all, I had proof, an equity curve that went up, a track record that said, this works, a sense of familiarity with price that felt intuitive. And intuition is seductive. It whispers, you don't need to think so much anymore. You've earned the right to trust yourself. You're not like other traders. That's where the trap begins. I didn't abandon my system. I reinterpreted it. And reinterpretation is always justified by confidence. Instead of asking, does this trade meet all my conditions? I started asking, does this make sense? That seems harmless, intelligent even, but makes sense is a feeling. Meets conditions is a fact. When feelings replace facts, discipline quietly loses authority. I didn't notice it because nothing hurt yet. My equity curve didn't warn me. My account balance didn't alert me. There was no external signal that something was off. Inside, though, something had shifted. My focus was changing. I started checking P&L more often. Not obsessively, just casually. I framed days around green or red instead of clean or sloppy. A winning day felt good. A losing day felt personal. That's another warning sign most traders miss. When P&L starts affecting your mood more than your execution, trading stops being neutral. And neutrality is everything. Neutral traders follow rules. Emotional traders negotiate with them. At the time, I would have told you I was calm. And I was. But calm isn't the same as grounded. Grounded traders are alert. Comfortable traders are relaxed. And relaxed traders don't feel like they're doing anything wrong. They feel like they've earned flexibility. That's where ego hides, not in loud confidence, but in quiet entitlement. I didn't think I was better than the market. I thought I understood it. There's a difference. Understanding gives you information. Believing you understand gives you permission. Permission to bend. Permission to interpret. Permission to decide that rules are guidelines now. And when rules become guidelines, discipline becomes optional. The irony is this. I was still doing well. That's why this phase is so dangerous. Most traders never experience it because they never get here. They either quit early, blow up, or stay stuck in fear. But when you finally become consistent, when you finally feel steady, that's when the real psychological work begins, because success changes the stakes. When you're losing, the market is the enemy. When you're profitable, losing your identity becomes the threat. At that stage, mistakes don't just cost money. They challenge who you think you are now. A profitable trader, a disciplined trader, someone who finally figured it out. So without realizing it, I started protecting my identity more than my process. I didn't want to end days red, not because of the money, but because it felt like regression, like proof that maybe I wasn't as solid as I thought. So small compromises started to feel reasonable. Entering a bit early, holding a bit longer, letting a trade breathe because it usually does. Each choice felt intelligent in isolation, but together they marked a shift away from structure. I stopped treating my system as something external, something I obeyed. I treated it as something internal, something I could override. And once that happens, objectivity disappears quietly. I didn't feel reckless. I felt confident. And confidence without constraint is where most traders get hurt.
Not immediately, not dramatically, but inevitably. There was one rule that existed specifically to prevent this drift. One rule that had nothing to do with entries, exits, or indicators. One rule that existed solely to protect me from continuing once clarity was gone. At the time, it didn't feel important anymore. It felt conservative, like something I needed when I was still learning. And that's how I knew later that this chapter had already ended. Not with a loss, but with a belief. The belief that I had outgrown the very thing that kept me grounded.
The rule existed long before I ever needed it. That's the part I didn't appreciate at the time. When I first created it, it felt obvious, almost excessive, like something you write when you're still scared of the market and don't trust yourself yet. It wasn't technical, it wasn't complex, it didn't require interpretation. When my conditions are gone, I stop trading. That was it. No exceptions, no adjustments, no just one more. The rule didn't care if I was up for the day or down. It didn't care if the market looked active or slow. It didn't care how confident I felt. Its only purpose was to interrupt one specific moment, the moment I stopped trading objectively. At the time I created it, the rule felt protective. It kept me from overtrading. It forced me to step away when emotions started creeping in. It gave me permission to stop without feeling like I was quitting. Back then, I needed that. I was still learning my own patterns, still discovering how quickly confidence could turn into impatience, still vulnerable to chasing. So the rule made sense. But something changes when you become profitable. Rules that once felt necessary start to feel conservative. Boundaries that once felt supportive start to feel restrictive. And that's when context matters more than intention. I didn't wake up one day thinking, today I'm going to break my rules. I woke up thinking something far more dangerous. I understand this well enough now. That belief didn't feel arrogant. It felt earned. I had evidence, a track record, months of consistency. So when the first moment came, when my conditions subtly disappeared, I didn't hear alarms in my head. I heard reasoning. The market was still moving. The session wasn't over. Nothing bad had happened yet. So I stayed. The trade I took after that wasn't reckless. It wasn't impulsive. It didn't violate my system in an obvious way. That's important. Because most traders imagine rule breaking as something loud and emotional. It rarely is. Most rule breaking in trading is quiet, calm, and justified. I told myself I was still within context, that the conditions hadn't completely disappeared, just shifted slightly. And slightly is where discipline erodes, because slightly invites interpretation. At that moment, the rule wasn't broken, it was reframed. Instead of being a hard stop, it became a suggestion. Instead of something I obeyed, it became something I evaluated. And evaluation feels intelligent. That's the trap. I took the trade. It worked. Not massively, but enough. Enough to reinforce the wrong behavior. Enough to tell my brain, this is fine. And when the market confirms your justification, the rule loses authority instantly. Not because it was wrong, but because it wasn't needed to win this time. That's how the relationship with the rule changed. It stopped being protection. It became optional. From that moment on, the rule didn't disappear, but it no longer had teeth. Every time I reached the point where I should have stopped, a new internal dialogue appeared. Not emotional, not panicked, logical. Conditions aren't perfect, but they're still workable. I'm not emotional, I'm just focused. I don't want to cut a good session short. Each sentence sounded reasonable. Each one removed urgency from stopping. And urgency is what rules rely on. Without urgency, stopping feels unnecessary. This is the part that's hard to explain to people who haven't been there. Breaking the rule didn't feel like risk-taking. It felt like optimization, like squeezing more out of a good day, like using experience instead of blindly following structure. And that's why it was so dangerous. Because the rule wasn't about maximizing opportunity, it was about protecting clarity. But clarity doesn't announce when it's leaving. You only realize it's gone after you've acted without it. I stayed in the market longer than I should have, not because I needed money, but because stopping felt wrong. Stopping felt premature. Stopping felt like leaving opportunity on the table. That's when trading subtly becomes emotional regulation, not because you feel bad, but because you feel unfinished. The discomfort isn't fear, it's incompleteness. You want resolution, you want closure, and trading promises both. That's why just one more trade is so seductive. It feels like tying up loose ends, like restoring balance. But balance doesn't come from activity, it comes from restraint. I didn't realize that yet, so I stayed. And once I stayed past the point where I should have stopped, the session changed. Not dramatically, quietly. My reads became less clean. Not wrong, just less precise. My patience shortened slightly. I entered a bit faster. I rationalized it as decisiveness. My exits became more negotiable. I told myself I was managing actively. But the truth was simpler. I was less willing to accept being wrong. Because being wrong now felt different than before. It didn't feel like a normal loss. It felt like a threat to something. That's when I realized, much later, that the rule was never about the market. It was about identity protection. The rule existed to stop me before decisions became personal, before trades started carrying emotional weight, before execution turned into defense. Because once you're defending something, you're no longer neutral. I didn't see it that way then. I only saw that I was still making money, still green, still doing fine. Which is exactly why I kept going. Here's a hard truth that doesn't get talked about enough. Most traders don't break rules because they're emotional. They break rules because they feel capable. Because they believe experience gives them permission, and sometimes it does. But permission without limits is where discipline collapses. The rule started to bend more frequently, not every day, just often enough that it no longer felt absolute. Some days I stopped correctly. Other days, I pushed a bit longer. I told myself I was being flexible, adaptive, experienced. But consistency doesn't survive flexibility. It survives repetition. And repetition only exists when rules are non-negotiable. The trades I took after the rule should have stopped me weren't disasters. That's another important detail. They weren't obviously bad. Some even worked, which made everything worse, because now the rule wasn't just optional, it was questionable. My mind started asking, do I really need this anymore? That question is lethal, because the moment you start questioning a boundary, you start testing it. Testing it leads to justification. Justification leads to erosion. Erosion leads to behavior you wouldn't have defended before. I began widening stops, not dramatically, but incrementally. It didn't feel like fear. It felt like giving the trade room. I began holding past targets, not out of greed, but because momentum was strong. I took trades outside my ideal window because the market doesn't care about sessions. Each adjustment seemed reasonable. Each one moved me further away from structure. And structure is what keeps trading boring. Boring is good. Boring means predictable. Boring means repeatable. Excitement is what happens when structure starts dissolving. And excitement feels good until it doesn't. What changed most during this phase wasn't my trading. It was my internal dialogue. I started talking myself into trades more often, explaining them, defending them internally before clicking. That's always a warning sign. Clean trades don't require convincing. They feel obvious. When you have to persuade yourself, clarity is already compromised. I didn't stop immediately, because stopping would have meant admitting something uncomfortable, that my confidence had drifted into entitlement, that my success had created blind spots, that I wasn't as immune to self-betrayal as I thought. And that's hard to accept when things still look okay on the surface. So I continued, not recklessly, but persistently, until the cost of ignoring the rule became undeniable. And that realization didn't come with panic, it came with clarity. But that moment belongs to the next chapter.
The most dangerous phase wasn't when I broke the rule. It was when I started negotiating with it. Because negotiation feels responsible. It feels mature. It feels like experience finally paying off. It feels like you're no longer trading from fear, but from understanding. That's the illusion. Rules are meant to be obeyed. Experience is meant to be applied. But once experience starts modifying rules in real time, the relationship flips. The rule stops governing behavior. Behavior starts governing the rule. And that's when discipline becomes conditional. At first, the negotiations were quiet, internal, unspoken, almost subconscious. I didn't say, I'm breaking my rule. I said, this situation is different. And different is a powerful word. Different sounds intelligent. Different sounds adaptive. Different sounds like growth. But different also dissolves boundaries. Because once something is different, anything can be justified. The market didn't suddenly become chaotic. My strategy didn't stop working. Nothing obvious changed externally. What changed was how much space I gave myself to decide. Before, decisions were binary. Conditions present, trade. Conditions absent, stop. Now, decisions lived in gray areas. How absent are they really? Isn't this still within the spirit of the setup? Am I being too rigid? That last question came up often. Rigid. No trader wants to feel rigid. Rigidity sounds like fear. Rigidity sounds like inflexibility. Rigidity sounds like something beginners struggle with.
So I started positioning discipline as something that needed refining, evolving. That word, evolving, did a lot of damage, because evolution implies improvement. But improvement without constraint doesn't lead to mastery. It leads to personalization. And once trading becomes personal, objectivity starts to rot from the inside. I noticed subtle changes first, not losses, changes. I stared at charts longer after missing trades. I replayed moves in my head more often. I felt slight irritation when price moved without me. Not anger, just a sense of, that should have been mine. That feeling never existed before. Earlier, missed trades meant nothing. They were part of the plan. Now they felt like inefficiencies, like mistakes I could correct by staying just a little longer. So I stayed. And when you stay too long in the market, you don't just see opportunity, you see temptation. Every micro move starts looking tradable. Every pause starts looking like a setup forming. Every pullback looks like a second chance. That's when selectivity erodes. You don't lose discipline all at once. You lose standards. The setups I took weren't bad. That's the part most people don't understand. They were just less good.
Slightly rushed, slightly forced, slightly outside optimal context, but slightly compounds, and compounding erosion is invisible until it's too late. I told myself I was reading order flow better, that I was becoming intuitive. That intuition is something you earn, and that's true to a point, but intuition doesn't replace structure. It operates inside it. Without structure, intuition becomes impulse wearing a suit. I began adjusting position sizes, not dramatically, just small increases on trades that felt right. The justification was logical. If confidence is high and the setup is clean, why not? Because confidence is not a signal, and feels right is not data. But in the moment, it didn't feel reckless. It felt efficient. I believed I was allocating risk intelligently. In reality, I was assigning meaning to outcomes before they happened. That's when outcomes start controlling behavior. A winning trade reinforced the behavior. A losing trade demanded explanation. Why didn't it work? Was the read off or was it just unlucky? I leaned toward unlucky because unlucky preserves identity, and that's the subtle shift that matters most. Earlier in my trading journey, losses were neutral. They were expected. They were data. Now, losses felt like interruptions, like distortions, like noise interfering with something I'd figured out. The rule doesn't care. The moment I believed my judgment could override the rule, discipline became a debate. And debates have winners and losers. The rule didn't win those debates. I did. At least, I thought I did. But every time I won, the rule lost authority. And authority, once lost, is almost impossible to restore without pain. I began reviewing trades differently. Earlier reviews were factual. Was the setup there? Was execution clean? Was risk respected? Now reviews included emotion. Well, given the context, considering how the market was moving, it made sense at the time. Those phrases are red flags. They signal rationalization. Clean discipline requires no defense. You don't need to explain a rule-followed trade. You only explain trades you're unsure about. And I was explaining more often. That was the clearest warning sign, one I ignored. I stopped exiting immediately when wrong. I waited. Not stubbornly, strategically, I told myself. But waiting is often just hesitation wearing discipline's clothes. And hesitation comes from attachment. I was attached to being right, attached to being consistent without being constrained, attached to the idea that I had transcended strict rules. That's when the mental load increased. Earlier, trading sessions were light, focused, short. Now they were heavy, mentally draining. I felt tired after sessions, not because of losses, but because of constant decision-making. Decision fatigue set in, and fatigue makes discipline expensive. You start choosing relief over correctness. Relief looks like taking trades. Relief looks like staying engaged. Relief looks like fixing the discomfort. Stopping feels uncomfortable when you're mentally invested. So I didn't stop. I stayed long enough for the market to test me. Not punish me, test me. Small losses stacked up. Nothing dramatic, just enough to create friction. That friction changed my tone internally. I became slightly defensive, not outwardly, internally. I started needing trades to work. That need didn't come from desperation. It came from commitment. I had committed to my read, committed to my presence, committed to being engaged. And commitment, when misplaced, becomes pressure. Pressure distorts perception. I saw setups where there were none. I ignored warning signs I would have respected months earlier. I told myself I was just pushing through a rough patch, but rough patches require stepping back, not pushing harder. I had forgotten that, because stepping back now felt like admitting something, and I wasn't ready to admit it yet. The negotiation phase ends the moment you realize you're no longer trading the market, you're trading your internal state. I wasn't there yet. I still believed I was in control, but control had already shifted, from structure to emotion, from rule to reasoning, from clarity to justification. The consequences didn't arrive all at once. They arrived quietly, through fatigue, through tension, through subtle loss of confidence disguised as certainty. And once that door opens, the next phase becomes unavoidable. The market doesn't warn you when it's done being patient. That's one of the most misunderstood parts of trading psychology. People think the breaking point comes with chaos, big losses, panic, visible mistakes. But the real breaking point is quieter than that. It begins the moment you realize something is off, but you can't quite explain what. I felt it before I saw it. A tension during sessions that wasn't there before. A mental heaviness that followed me even after I shut the screens off. A sense that I was working harder for the same results. Nothing dramatic had happened yet. That's why it was dangerous. When the damage is subtle, you try to power through it. You tell yourself it's temporary, that every trader goes through phases, that consistency isn't linear. All of that is true, but there's a difference between a normal drawdown and a psychological debt coming due. What I was experiencing wasn't just variance, it was friction. Friction between who I believed I was as a trader and how I was actually behaving. I still looked disciplined on the surface, same charts, same execution tools, same risk language. But internally, I was carrying something new, resistance. Resistance to stopping, resistance to losses, resistance to the idea that I needed to step back. That resistance leaked into everything. I second-guessed exits. I hesitated on entries, then chased them. I widened stops after entering instead of before. Each adjustment came from the same place. I didn't want to accept being wrong anymore. Not because I couldn't handle losses, but because losses now meant something. They felt personal. That's the cost of drifting away from rules. Rules absorb emotional impact. When rules fade, you absorb it instead. And I was absorbing too much. The breaking point didn't arrive as a single bad trade. It arrived as a sequence of reasonable decisions that compounded into something unreasonable. A small loss that should have been ignored became a problem to solve. A missed entry became something to correct. A slow session became an opportunity to make something happen. I started scanning more markets, staying longer, watching price more intensely. Intensity is often mistaken for focus. They're not the same. Focus is selective. Intensity is desperate. And desperation doesn't always feel emotional. It often feels urgent. Urgency makes everything feel justified. I began needing the market to cooperate. That's the clearest sign that control has flipped. Earlier, I followed the market. Now I wanted it to validate me. That's when the first truly damaging session happened. Not catastrophic, just revealing. I broke the stopping rule decisively that day. Not subtly, not gradually, decisively. Conditions were gone early. I knew it, clear as day. The rule was screaming, but stopping felt impossible. I told myself I'd just sit and observe. No traits, just watch. Observation turned into anticipation. Anticipation turned into positioning. Positioning turned into a trade. The trade lost. Not badly, but cleanly. A normal loss. One I would have accepted without hesitation months earlier. But now I didn't want to end the session on that note. Ending felt wrong, incomplete. So I stayed. The next trade was faster, less patient. It lost too. Now something shifted inside me. Not panic, pride. I knew I was better than this. That belief is dangerous because it creates urgency without humility. The next trade wasn't in my plan, not really. It had similarities, enough to justify it. It lost. That's when the market stopped cooperating, not aggressively, clinically. Every edge I thought I saw failed. Every adjustment backfired. I wasn't being punished. I was being exposed. Exposed for trading my need to recover instead of my system. Exposed for letting judgment override structure. Exposed for negotiating when I should have obeyed. The P&L damage wasn't devastating. The psychological damage was. I felt something I hadn't felt in a long time. Doubt. Not about my strategy, about myself. I closed the platform that day and didn't feel relief. I felt empty. That's the moment that matters. When stopping doesn't bring peace. When stepping away doesn't reset you. That means you've crossed from trading outcomes to trading identity. That night, I replayed the session, not technically, but emotionally. I could trace every decision back to a moment where I should have stopped, not just that day, weeks ago, months ago. The rule hadn't failed me. I had simply stopped listening. And here's the hardest part to accept. Nothing forced me to break it. There was no pressure, no emergency, no necessity. I chose not to stop because stopping felt like admitting something, that my confidence had quietly mutated, that my discipline had become performative, that my rules no longer had authority, only presence. The market didn't take my money that day. It took my illusion. The illusion that experience makes you immune. The illusion that awareness alone prevents mistakes. The illusion that success automatically upgrades discipline. What broke wasn't the account. It was the narrative I'd been telling myself, that I was evolving, that I was operating on a higher level now, that strict rules were for an earlier version of me. In that moment, the rule finally made sense again, not intellectually, emotionally. It was never there to stop bad trades. It was there to stop this version of me, the one who believed he didn't need it anymore. The fatigue I'd been feeling suddenly made sense. The heaviness, the resistance. I hadn't been tired from trading. I'd been tired from defending choices that violated my own structure. That kind of fatigue doesn't go away with rest. It goes away with honesty. I didn't trade the next day. Not out of discipline, out of necessity. I needed distance from the charts, from the narrative, from the person I'd been pretending to be in the market. And in that distance, something surfaced that I'd been avoiding.
Respect. Respect for the rule. Respect for limits. Respect for the fact that markets don't care how long you've been profitable. They only care how you behave now. The breaking point didn't destroy me. It recalibrated me. But recalibration always costs something. Usually ego, always comfort, and sometimes Identity. That cost is unavoidable. The only question is whether you pay it early or after the damage compounds.
Stepping away didn't feel productive. There was no relief at first, no clarity, just silence. And that silence did something important. It removed the noise I'd been hiding behind. Without charts moving, without trades to manage, without outcomes to react to, I had no distractions left. Only behavior, only decisions, only patterns. That's when the truth surfaced, not dramatically, but honestly. I hadn't lost discipline. I had outgrown my respect for limits. That distinction matters, because discipline can be rebuilt quickly. Respect takes humility. The rule wasn't broken because it was flawed. It was abandoned because I believed I had surpassed the version of myself that needed it. But the market doesn't care who you used to be. It only interacts with who you show up as today. And the trader I had become needed the rule more than ever. That realization didn't come with shame. It came with clarity. I started reviewing my behavior without judgment, not asking, why did I fail, but asking, what was I protecting? The answer wasn't money. It was image. Consistency had become part of my identity. Confidence had become something I felt obligated to maintain. Stepping away had started to feel like weakness instead of wisdom. That's when rules become fragile, when they threaten self-image. So I rewrote the rule, not structurally, psychologically. The original version focused on conditions. When my setup is gone, I stop. The rewritten version focused on state. When clarity fades, I disengage, regardless of opportunity. That shift changed everything, because clarity doesn't depend on charts. It depends on internal alignment. I didn't need to wait for technical invalidation to step away anymore. I needed awareness. Awareness of mental load. Awareness of emotional friction. Awareness of subtle resistance. The moment stopping felt uncomfortable, that was the signal. Not to push harder, not to justify, to exit. This rule didn't negotiate. It didn't ask whether the day was green or red. It didn't care about momentum or potential. It respected one thing only: my ability to remain neutral. Neutrality is fragile. Once it cracks, execution becomes contaminated. That's the mistake I won't repeat. I also changed how I evaluated sessions. Earlier, success meant profit or loss. Later, it meant rule adherence. Now, success meant something quieter. How clean did my decisions feel? Did I hesitate? Did I explain too much internally? Did I feel pressure to participate? If the answer was yes, the session was already complete. No trade was required to validate it. That reframed everything. I no longer needed closure from the market. I found it in consistency, in restraint, in walking away without needing resolution. That's a level most traders never reach, not because they can't, but because it feels counterintuitive. We're taught to engage, to capitalize, to extract. But maturity in trading is knowing when not to interact. The rewritten rule also changed my relationship with confidence. Confidence stopped being something I leaned on. It became something I protected. If confidence required forcing trades, it wasn't real. If confidence faded when I stopped, it was dependent. True confidence survives inactivity. That understanding removed urgency from my process. I stopped feeling like every session mattered, because no single session does, only behavior over time. I also reintroduced boredom on purpose. Shorter sessions, fewer trades, less screen time. Boredom is discipline's natural environment. If trading feels exciting, something is usually wrong. Not always, but often enough to be cautious. And cautious doesn't mean fearful. It means respectful. Respect for randomness, respect for limits, respect for the fact that experience doesn't eliminate bias, it often disguises it. The rule no longer felt restrictive, it felt protective again, not because it stopped losses, but because it stopped deterioration. I wasn't trying to prevent mistakes anymore, I was preventing drift. Drift is what ruins traders quietly, not blow-ups, not bad strategies. Drift. Drift away from standards. Drift away from self-awareness. Drift toward justification. This time I noticed it early, and when I noticed it, I didn't argue. I stopped. No debate, no optimization, no narrative, just disengagement. That simplicity restored trust. Trust in the process. Trust in the rule. Trust in myself. Not because I was perfect, but because I was aligned again. That alignment is fragile. I don't pretend otherwise, which is why the rule remains non-negotiable. Not as a constraint, but as a reminder. The market will always offer another opportunity, but clarity doesn't always return on its own. You either protect it or you trade without it. I know which one costs more now, and that knowledge didn't come from a book or a mentor or a checklist. It came from breaking something valuable, then choosing to rebuild it intentionally. That's the difference between learning and repeating, between survival and mastery. And it all came down to respecting one rule, not as a limit on my trading, but as a boundary around who I become when I trade. The market didn't teach me a new strategy. It taught me who I become when I stop respecting my limits. If this resonated, stay here. This channel is about discipline, clarity, and the decisions no indicator can fix. Subscribe, not for more trades, but for better decisions.